Welcome to Nasdaq. Joining me in Times Square, we have Will Ryan. He's the founder and CEO of Granite Shares. We're going to get his commodity outlook and also his outlook on the ETF industry. Well, it's great to have you with us.
Thank you.
At MarketSet. Now, this is a very interesting conversation right now. Is gold obsolete in today's world of exotic assets?
Well, in many ways, you can think about we've been trying to replace gold for hundreds of years, but haven't really found a really relevant way to do that. And so if anything, gold is more relevant now than it ever has been in a world of negative interest rates and currency devaluations around the world, that people are looking for a hard asset, looking for a store of value. And I think that's really the role of gold.
All right, we can take a look at the 10-year performance that we have in our chart, historical performance, and you can certainly see the outperformance there.
Yeah, I mean, this particular chart is kind of interesting because we actually looked back at yield curve inversions and really wanted to try and understand, well, what happens to gold prices after a yield curve inversion? And so what this chart is trying to do is just look at these yield curve inversions and then what happens to the price of gold. And what we found was the price of gold reacted very favorably when the yield curve inverts. In some cases, retracing back over 50% higher after a yield curve inversion. So obviously, if that were to happen today, that would put gold at an all-time high, so a new record for gold prices.
All right, let's talk about the ETF industry. You've been a pioneer within this space. Is there still growth opportunities around?
Yeah, so the ETF business, I think, just think of it as the new technology within the asset management world, and that's just going to continue. So we just saw the news actually out this week that for the first time, assets in ETFs and index mutual funds surpassed those in active versions. And so the business just continues to grow and get stronger and stronger. And I think that growth that we've seen since the beginning will continue. And really what's driving that is, of course, people wanting low cost, transparent, and liquid investments.
What are the established players getting right and what are they doing wrong?
Well, I think the established players in the ETF world, what they got right is getting access to core building blocks of portfolios. So providing access to core equity and bond fixed income. I think that where there's room to grow is obviously on the more innovative side. I think where established players went completely wrong that are not in the ETF business is they obviously ignored ETFs, thought it was a fad, and then now are trying to play catch up.
Mm-hmm. All right, so there's a handful of gold and mixed commodity ETFs that are out there, and that's what Granite Shares specializes in. How are you different than them?
Well, I think what we were trying to do was really trying to shake up this space. And like I said, what we're all about is innovating and really trying to establish new benchmarks for existing categories. And so we want to start with commodities because that was an area we felt like investors were poorly served. The existing product offerings typically had high management fees, were structured so that people could get K1s, or if there were notes issued from banks, they carried the credit risk of the banks. So what we wanted to try and do is just establish a really low cost, but some better optimal structured platform. So we did that with gold, with BAR, which is the lowest cost way to invest in gold based upon 1/100th of an ounce gold backing. Lowest cost way to invest in the Bloomberg Commodity Index with COMB and COMG, similar with the GSCI. So really trying to establish a low cost core commodity range with a better outcome for investors.
All right, now to wrap up here, the key question is, will we ever see a Bitcoin ETF for retail investors?
So I think we will. I've been doing ETFs for a long time. There have been a number of these kind of big challenges. So if we actually wind the clock back to gold, back in 2004, what most people will now forget is it took many years for gold ETFs to be approved by the SEC. Similar with leverage, with other products that have gone, we just saw the approval of what we call in the industry non-transparent active. But in any way, Bitcoin now has been going for 6 years. That's from the date that the Winklevoss twins filed the first application till now. So I personally believe that we'll see a Bitcoin ETF. Typically, all these things kind of happen eventually. It's just a question of timing.
All right. Thank you so much, Will, for joining us at MarketSite. And thank you for
Jill.
joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.